It's possible that one of the world's strongest anti-crypto groups was planning to give up in secret. There is a huge change going on right in front of our eyes. Most people won't feel this tremor until after the earthquake has happened. The real story is happening behind closed doors, in the boardrooms of financial giants who once swore they'd never touch this world. The daily charts flash red and green, making noise and being a distraction. These are the events that will shape the future. The tiny clues that tell the difference between people who can see what's going to happen and people who are left wondering what happened. There are new rules for getting rich all the time, and the field is changing quickly. The most valuable thing an investor can have is knowledge of these tectonic changes before everyone else does. It's not luck. To see the trends that other people miss, you need to have the right framework. This is exactly why I worked on and improved the Ultimate Millionaire's Investment Guide for more than 10 years. You won't find just another bunch of PDFs or Excel files here. It's the result of more than 10 years of in-depth study, real-life investment experience, and methods that have been tried and tested in battle. It's a step-by-step plan that will clearly demonstrate how to locate the next huge chances before they hit the popular news. If you're ready to stop responding to the market and start predicting what it will do next, the link is in the description below. To start, let's take a look at the current market picture, which is more than just a list of numbers. We can see that XRP, an asset that has been a fight for bulls and bears, is staying put around $280. This price won't stay the same. It's a story about being strong. Not long ago, it broke through a key support level and dropped below 272, a level that made many people hold their breath. It almost hit a low point of 270, which is a very stressful number for some, but it slowly made its way back up. This is more than just instability. It's a test of how sure the market really is. Each and every time we see the same story. Bitcoin is once again taking back the area above $110,000. It looks like Ethereum will break through the important psychological barrier of $4,000, and Solana has soared back over the $200 mark. After a time of great fear, when the mood index dropped to a scary 28, the market is starting to feel better. A 5% rise in Ethereum and Solana may not seem like much, but it's the direction that counts. It means that life is coming back. This whole episode is a strong warning of how important this digital frontier really is. The cryptocurrency market isn't a calm lake. The ocean is wild and unexpected, with big waves and calm periods. These waves, these painful drops and thrilling swells are not problems with the system. The system is made up of them. This is what it means for a new asset class to be making its way on the world stage. If you want to get through these waters, you need to be like a seasoned sailor who knows that storms are a normal part of exploring new places. If a 5% or 10% drop makes you feel scared, it could mean that this trip isn't right for you. On some days, assets have gone down or up by 20% or even 30% in just 24 hours. To get into this revolutionary place, you have to be able to handle the chaos that comes with it and see the long-term goal beyond the current storm. Now let's look past the crypto charts and see the big picture of the world economy, where the Federal Reserve is the most powerful piece. The Fed's favorite way to measure inflation, PCE numbers, were just revealed. As expected, they showed a 2.7% rise, with the core measure coming in at 2.9%. As you might expect, it sounds normal and almost boring at first glance. But there is a dangerous stream below that calm surface. The rate of inflation has been this high since February. This shows a very deep conflict. The Fed has started to lower interest rates, but inflation is still going strong in the short term. They are now almost in an impossible situation because they have to walk a very thin line over a chasm of economic instability. The mystery grows when we think about the Federal Reserve's recent very big change in tone. They have made it clear that their old goal of 2% inflation is no longer their main focus. They are no longer focused on price issues. Instead, they are looking straight ahead at the job market. What does the job market say? It's showing red lights. It's saying that the economy is slowing down and that something needs to be done. This, along with GDP signals that show they need stimulus, has set them on a road they can't change. Even though yesterday's high GDP number would normally be a reason not to cut rates most, people agree that they will not do so. The chance of another rate cut is still stubbornly high at around 90%. All eyes will be on them in a little more than 4 weeks to see if they do what they said they would do. There are many signs and their own words that say yes. They seem set on making another cut and maybe even another one after that before they even think about taking a break to see what happens. Things are getting ready for something big to happen. You might wonder why the US Federal Reserve's or the SEC's statements have such a big effect on what seems to be a decentralized global market. The truth is that the United States is at the center of the world financial system. A shocking 60% of people who interact with crypto material do so from the US. But it's not that simple. It's almost a record high for foreign buyers to have almost a third of their money in US stocks. The biggest and most important companies in the world are American. USDT is the most safe coin in the crypto world. It is tied to the dollar, not the euro or the yen. As a result, the whole digital asset area gets sick when the American economy does. The markets can be shook by what the President of the United States says. It's not bias if another G7 leader says something similar, but it might not be noticed. It's a deliberate recognition of where the power is right now. Now we get to the heart of the problem, a story that could be bigger than any other. In the world of business, some names are very important. The old guard's strongholds are institutions. Vanguard stands out as a giant among them. It is the world's second largest asset manager and controls trillions of dollars. When crypto first started to rise quickly, Vanguard put up walls around its clients and told them that crypto assets had no place in a real portfolio. Even competitors who were skeptical at first, like JP Morgan, finally gave in to customer demand for Bitcoin ETFs, but Vanguard refused to give in. They were the last big resistor, the only group that said no for sure. Their former CEO was very clear, which kept their huge group of investors from getting involved in the crypto revolution. It's about to break through that fence. The unthinkable is happening according to a number of reliable sources, such as Eleanor Terrett's report and Eric Belchunis's analysis for Bloomberg. Vanguard is working hard to get rid of its ban on crypto ETFs. They're about to kneel down. This is not a small change to the policy. It is a historic give-up and a major shift in direction from one of the most conservative financial giants. People used to think that the new CEO would stick with the old ways, but it looks like he or she is steering the huge ship in a whole new direction. This move opens the doors to a huge amount of new money. We are talking about the 50 million people who have money in Vanguard. There are so many of them that it's hard to believe all of them will switch to Bitcoin at once. They have twice as many funds as any other company in the US. Giving their clients access, even if it's just for fun, creates a wave of desire that the market has never seen before. There may be more money and trust in this space because of this one choice than from almost any other event in recent history. And if this access is given to future ETFs, like a possible XRP ETF, the effects are really huge.